I'm just wondering if one of the reasons for a bit of optimism in EM is the fact that US equities are very keenly priced at the moment. Does that make EM more attractive?
To some extent, yes. I mean, because you think of it that EM has been beaten up because of the tariffs, trade war, and the dollar strengthening. And if there is any positive news, it means it really bodes well very much for EM. And so that's one of the reasons why we feel that any incremental news coming up on a truce or a pause in the trade war or the tariffs is going to be very positive for the EM stocks going forward. So 2020 might be shaping up to be a good year for EM.
Yeah, no, I know within EM you're quite keen on semiconductors, some tech plays, and you like precious metal stocks as well. Now, is that part of your liking of semiconductors, or is that partly a haven play as well?
The semiconductors are actually more than haven plays. There are certain semiconductors in the emerging markets coming from Taiwan or Korea, which are a secular story. Now, if you think of it, whether we are talking about 5G or we are talking about any of these drones and AI, artificial intelligence and everything, they all need the computational power. And that's where the semiconductor play comes in. And so there are some which will do very well, irrespective of the direction in which the market goes, because at the end of the day, the economy is transforming more and more into a computation-reliant economy around the planet. Now, precious metal, it kind of falls in line with the previous speaker, is if you think that the dollar and the Fed are going to go, if the Fed base case is no cuts, but if anything, it is skewed to the downside that they will cut something a couple of times in 2020, that kind of bodes very well for the precious metals. And that's where you are probably seeing that why gold had a reasonably very good year after like 5 or 7 years hiatus. And that's where we remain bullish on the precious metals.
Seems to me you have to be making a pretty strong bet, though, on the U.S. economy slowing down, which maybe that's because the trade war keeps going, and that would be the other factor that would cause the Fed to keep cutting rates next year, because right now they've made it pretty clear they think the economy is in a good place. This pause looks pretty definite.
In certain ways, if you look through time, I mean, the Fed's bias always has been towards optimism. And that said, we are not exactly saying that the U.S. economy is going to slow down. What we are going to say that U.S. is going to need more stimulus. I mean, 2009 onwards, the whole global economy has been running on stimulus, whether we talk about ECB or the Fed or something. What has fundamentally changed, which makes us think that the stimulus is not going to be needed, whether in monetary or in fiscal, which will actually make the economies propel ahead on their own in a significantly strong way. And that's where we are saying we don't need it to weaken. Even if a status quo comes in, you will probably see there is enough incentive for the Fed to go ahead and cut the rates somewhere in the middle of 2020.